Teddy from the financialbulls.com with a bi-weekly market recap along with some setups for next week and also reviewing the setups from the previous week. So right here is just a chart of the Spider S&P 500. The SPYs, and I mean if you're a trader, you obviously know that February has just been ridiculous. As you can see right here, on February 2nd, on this nice RDR, that where we broke below the previous lows around 198, followed through. That was your signal right here to get long. The volume wasn't substantial, but it was okay. And ever since then, we've just been off to the races, having 3 down days with 10 plus up days. So this has been a ridiculous rally, just a ridiculous February that hopefully if you didn't try to short into this dumbly without any points of reference, maybe you could have shorted right here as there was kind of a false move down and you actually would have gotten some follow through on the next day when the market went down to 204. But then once it broke above this previous high, if you didn't, or if you weren't happy with these profits, if you did short around here on the previous day's high on February 5th, you would have been killed. So it's a good lesson to take your losses if you're short, but also just to stick with your winners if you're long from down on 198. And even though you are down, you are long from 198, a lot of people are, not 198, sorry, more realistic to say 201, it's important to make sure that when you're deciding whether to take off your long or to sell, your whole basis is based on what you think the market will do right now, not where you're long from. That's the thing by Paul Tudor Jones, where he says he can always tell a rookie trader when they ask him like where are you long from, and he said that's completely irrelevant. It's all about what's my view on the market the next day. That's what I care about. So some food for thought, some cool stuff. But as you can see, just recapping from end of 2014, beginning of 2015, we consolidated, and then this just gave way to this nice prolonged rally. And as of right now, where I place my bets, obviously, I feel like it's getting kind of toppy here. We had a nice doji today, which is the candlestick term for kind of indecision, after a nice run up. So I wouldn't be comfortable putting on any longs. I was very comfortable putting on longs down here. Up here, not so much, but I also wouldn't necessarily be comfortable shorting into this. So I'm just kind of waiting to see what the market does. But there are definitely some long setups and some short setups that you can take advantage of. Not as many as the past 2 weeks, but there are some good ones. So we'll go through. Just to recap the previous ones, here are some short plays. DNOW, now Inc. This turned out to be a great play. So this is the day right here is where I said this is where I recommended to sell. As you can see, we had substantial volume, some nice solid, not below average volume, but it was consistent through this nice run up from 2250 all the way to 27 in a matter of a few days. And then we had this day right here where penetrated through the previous day's high, came back below. Look at that volume right there. 2.2 million shares on the average 50-day of 1.6. So that was a signal that sellers were coming into the market. And ever since then, stocks trailed down. And keep in mind, this is pretty significant given that the overall market, as I just showed in the SPYs, has rallied. So I'm pretty proud about that. Another short, this was kind of scary to short into, but it was definitely tradable. So you had this nice run up, and then the same RDR, what I like after an overbought stock. I'm looking for a downside move. Stocks can't go forever. Had higher volume than the previous day, as you can see. Nice follow through here. Again, nice follow through from 28 to 25. So that could have been a nice short if you caught that. MarineMax Incorporated, don't know what they do, some retail company. And now they've kind of just been doing nothing. A short that didn't really work out. A&W, well, it's not that it worked out, it just was kind of flat. This was the day right here for the short, run up. This though was a weaker short, I remember, just because of the volume. See here, it was this day. As you can see, that volume here is a lot shorter than this volume here, which shows the buying pressure was a lot stronger than the selling pressure, to put it simply. So that's why you can see you kind of have this nice consolidation. So if you bought puts, probably would have lost, and you would have cut your losses after you saw this weakness on these 4 days. If you sold some calls, you probably would have made money. So congratulations. It's just about what your risk parameters are and how you want to approach the market. For some long plays, I remember BMRN, BioMarin, this stock. I mean, all these stocks that I'm going through with my longs, even though they had some weak volume action that I was talking about. And I want to see strong volume action. After a big sell-off, I want to see strong volume to the upside on an up day, or I want to see some constructive down days with decreasing volume, all these different patterns that pretty much point to an upside move after a downside move or a downside move after an upside move. So right here, I mean, this just stock just went with the market. We learned it right here at 93, went all the way to a high of 110. Great move, RLYP. Relipsa, right here, we noted it, 31. It's trading at $40 now. Also, great move. Helped a lot by the market, I'm not going to lie. Market did help a lot. And as you can see, this volume action on that red dog reversal day where it broke the previous day's low, faked out a ton of shorts, and then just came right back above it, showed that there's some pivot point that you can trade against to take advantage of this nice oversold situation where the stock went from $38 to a low of 31. So advantage would be to the buyers in that situation, in my opinion. You're buying into fear while the weak hands are just selling out and capitulating. HCNP was another one. As you can see here, nice volume action. This one went on a crazy rally from 14 to 18. So if you bought calls, you would have made a ton of money. And this was after this nice sell-off. And if you took advantage of the call, you would have gone in right here. Great move. This was a stock that I didn't talk about, but I was keeping my eye on it. Priceline. Look at this move. This is a big cap stock from $9.98 to $12.51, 25%. And it all started on this day right here. And as you can see, higher volume than the previous day, touched the previous day's low, broke below it, and this is a very liquid stock, so most likely there were some high frequency traders and some machines and automated systems that probably faked everyone out, pumped liquidity back into the stock and brought it above toward the day's high, toward the close on the strong volume. And this isn't retail volume, guys. This is all institutional volume. With a stock like this, you know it's all institutions. It's all high frequency traders. And after this nice sell-off, this would have been a signal to probably at least take off your short, get long, and look what's happened. You had another day right here that did the same exact thing. And ever since then, the stock's had a sick rally. And I can't say that I'd be smart enough to hold into earnings. I probably wouldn't want to take that overnight risk on a stock like this, which is so valuable. Voluble. What is that? That's not even a word. Volatile. But and I can't say I'd sell exactly at the top for all these stocks, but it's nice to see that they actually had some follow through from my initial entry point that I was pointing out. For stocks that I'm looking at right now, not many from the long side. PBPB. This one I just kind of like the look of this. You had a nice sell-off, strong volume, and you can see the down days are kind of much weaker hands on the down days than the up days. And you had this nice 3% move today, so maybe this one can get going again after a nice earnings gap. It filled the gap, and now it can hopefully go forward. SEM. This one. So I kept put this on my watch list actually a few days ago after this day right here, and I thought, 3 down days. It's getting a little bit overextended from 14 to 12. I had another down day, and I was like, all right, this probably isn't going to work out. Stronger volume too. And then it had this update today, and I was like, perfect. Not only was it an update, it closed near the day's high. It violated the previous day's low, but couldn't close below that low, and it couldn't hold below that low. And it closed pretty strongly on the open, as you can see on the 5-minute chart. So here was the previous low, that 1230, broke below, gap below, and then just had a nice rally off of that, and hopefully will make a continued run forward. So on the daily. So this looks like a nice risk-reward situation. And I can't analyze that volume right there. That's something's happening with TradingView right now, where they're just not displaying accurate volume. I don't know why. Hopefully they'll fix it soon. But I know this day had above average volume when I looked on Yahoo Finance. So it's okay. IRM, this is another one. Kind of like the look of this. Not too bad. Nice sell-off, some nice constructive days, holding some key levels, some nice volume on the previous day. CM, this was the one that I saw yesterday. So I saw increased volume, nice sell-off, close strong, and this previous get long and had some nice action today, up 1.5%. Also, another stock that I didn't mention in my last video, but I was definitely looking at, was favorite company, Ralph Lauren. Definitely go to Ralph Lauren, buy their shirts, buy their clothes. Great store. So Ralph Lauren, they missed on earnings. They had decreasing revenues. They didn't perform well this quarter, but it happens. It's not the end of the world. It happens to every single company. And this is after a nice, as you can see on the 1 week chart. I mean, it's had a nice run since 2010, $78, 200. It's a nice story. But short-term action, that's what we're focusing on. And as you can see, this day right here had okay volume, but that was a signal to get long because it couldn't hold below the previous day's lows, and then it had some nice follow through from 134 to 139 and 40. And now it's hanging around. I'd kind of wait for maybe an up day to get long again, but after the stock got killed from 172 to 139, you can't sell into that. I mean, you're crazy if you sell into that. All the smart money is selling up here, but now's the time where the risk-reward situation has been turned to be put in the favor of the bulls, in my opinion. I may be wrong. It may continue downward, and the trend may continue downward, but actually underlying, I feel like it is a really strong company for long-term holders, and it has great leadership, but, short-term, it could go either way. For some short plays that I'm looking at, Apple was another one that I was looking at. So it was this day, right? It was yesterday. And you see these volume days are just incorrect. The machine's not working. The website isn't working. I don't know why. And then it said today that I traded 9 million shares right here. And on Yahoo Finance and all the major financial news websites, it said it traded over 70 million shares, which is way above the average. So I know that's incorrect. And the stock had a 2.5% down day today. So hopefully this will get corrected by TradingView in the coming days. But the volume action to the downside is looking nice. I don't know about after today, but it would be a good short, I thought, right here, just because you had this on this day right here on February 24th, just because you had this huge run up in price. I mean, Apple has just been killing bears, and you never see. I mean, this is the largest company in the world trading like it's a penny stock micro cap company that just some biotech that just got their drug approved by the FDA. It's crazy. It's insane. I've never seen a stock like this. It's wowing the street, and it could go higher. And obviously, anyone who's tried to short into this has just been murdered. But I feel like a lot of it has to do with the overall market as well. But nonetheless, you see this day right here. Go on the 15-minute chart. You can see right here at 133, the stock broke above that high, couldn't hold it, failed below, and then just people got long. All the breakout traders, momentum traders, retail got long, they got faked out. It was a fake out. That's what they love to do. All these institutions know where your stop orders are. They know where your orders are. They know where your targets are, what kind of plays you're playing. So they faked them out, washed everyone out, did a nice little run, and then they did the actual washout today when the stock was down 2.5%. So right now, I wouldn't be comfortable shorting it just because it's Apple. And I feel like the time to short was maybe yesterday. But at the same time, we're having some nice selling pressure going on after a severely overbought stock. And overbought is relative, okay? It was overbought here, in my opinion, but it kept on going. But we're seeing some nice action to the downside. And then there's really just one more short play that I see. And that is, what is it? Oh, it's JetBlue. Yeah, JBLU. So airline stocks have had a nice run, especially with the decline in oil prices. Obviously, it's good for margins and just for overall profits in the airline industry. But right now, the price action speaks for itself. When you had this down day here, and once again, obviously that's not how many shares were traded. A lot more shares were traded than 622,000. I don't know if the program just stopped counting the number of shares like 9:45 in the morning. Who knows? But what you have here is on the 5-minute chart is you had a breakout past the previous day's high. Everybody got long, substantial volume, and then the stock just rolled over. Once it broke below 1811, back again, that was just able to get short, and now it's trading at 1752, so 3 to 4% lower. I feel like after this nice substantial run-up and this strong down day that faked out a lot of the bulls, the stock will most likely head to the downside. but I could be wrong. It could consolidate a little bit and could head higher. So if you want to take more of a low risk approach, you could sell some calls, and sell some just sell some spreads. Obviously, don't sell naked calls. That would be a good idea for small accounts, but do whatever you want. It's not my money. But what I would do right here is I'd actually most likely buy some puts. This looks like a good short. It's contrarian. That's my kind of trading style. I like to be contrarian. Most people see this. They want to buy into the weakness, whatever. I see some other different things in the price action that I feel like point to more downside. But overall, going back to the SPYs, market's been on a tear, so I just want to congratulate anyone who's been long and keep it up. I mean, you've done great. Market's been on a tear, so we'll see what happens. I don't know if companies deserve these types of valuations. This is to my fundamental view. I really know nothing about fundamental analysis. I just like to comment on it and just learning more about it. But as long as these interest rates stay low and Yellen keeps on postponing Fed rate hikes, I don't see how the market can really correct in a meaningful way. And I'm not talking about like a little 10% correction. Those are just normal, healthy market moves. I'm talking about, substantial, a bear market, which happens. The market can go down just as easily as it can go up. But in this current environment, everyone only thinks the market can go up. So we'll see where we go from here. But once again, congrats to anyone who's been long. You've made a heck of a lot of money. I wish I could do it. Too much schoolwork and SATs and college stuff. But yeah, congrats. So thank you for watching, and good luck trading.